please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's invite our market master, Tushar Pradhan, joins in. He is the CIO India of HSBC Global AMC. Tushar, hi, good morning. We spoke with you less than a month back and how things have changed, right? At that time, you had indicated that there's been a cyclical change in sentiment and, you know, there are signs of an economic upturn led by earnings. Do you stick by that view that this is still a bull market and all we are seeing right now is just intermittent correction?
Yeah, so I think the question is a little broader, and let me just kind of give you a little bit of an insight in terms of how this will work out. So there are internal and, as I call it, micro elements, and there is macro, and then there is the external element. I think today what we are seeing is probably a combination of all of these things not going in one direction. So for you to generate a bull market, you need all of these signals in one direction. What is continuing to be positive is the earnings season. And I think the buoyancy and the confidence that we see from companies especially is continuing throughout this earnings season. And there is a lot of indication that this kind of buoyancy is likely to continue. However, on the macro situation, I think things have changed in the sense that, you know, the oil price going up, the current account deficit now overshooting what most people thought would, you know, the year would end at. And on top of that, you also have a very strong dollar. So a combination of all of that is clearly going to put a lot of pressure on the macro. So as a result of which, the macro is turning a lot worse than expected. On the external front, we all know that the trade war and the ramification of that across companies in India as well as the entire global trade situation is not something which is a positive right now. And on top of that, if you have disruptions led by, the sanctions in Iran or whatever you may, give any attention to, is leading to some sort of uncertainty across the globe around the environment leading to the growth that we've actually seen in the US. So while we have currently very strong positive data on GDP coming from the US, positive data on unemployment coming from the US, positive data on capex coming from generally, some sectors in India as well, and the earnings growth story. So it is about, which part of the world do you see is the glass half full or half empty. I would think that the macro does have an element to where the markets move in the short term. But I think if you're a long-term investor, I think the positive signs are the continuing growth in earnings and the sustainable economic upturn that we can yet see forming in the next few months in India.
Okay.
Nevertheless, Tushar, I'm sure that you all would be having some morning meetings with the HSBC Brains Trust globally around the world. What's the received wisdom from them? Are they expecting the currency turmoil to continue?
Well, actually, if you recall, the think tank within HSBC had mentioned earlier this year that the year 2017 was the year close to Goldilocks. And this year we expected it to be Goldilocks, but not as much. So there was a slight degradation in terms of the positives. I think that is something of a view they continue to hold. What they are also indicating that the interest rate rise in the US, which was something which was bothering a lot of people at the start of the year, is going to remain fairly gradual. And I think that's something which is probably going to play out. The GDP growth rate in the US continues to be pretty strong. So I think there are pockets of pretty strong economic growth in the world, but they are not synchronized. So earlier in 2017, there was a pretty synchronized growth phase across all economies. But I think what we've seen is in the US, in Euro, and some parts of Asia as well, there is pretty strong growth. But it's countered by all of these situations leading from, the higher price of oil and some sort of pressure that puts into some economies which rely on oil as a large part of their economic growth. So I think when you look at all of that together, it's more or less in line with what we had thought of at the start of the year, that this is going to be a little more challenging year than last year. Okay. But on balance, from a corporate perspective, pretty positive.
Okay. Tushar, good morning. What about market positioning in individual sectors? At the peak, financials accounted for almost 39% of the index and IT was down to almost 10-11. I was just looking at the data now. It's almost 35-15 now. Your sense on whether, we would see some more rebalancing?
Yeah, I think clearly the IT sector is getting a pretty strong tailwind from the weakness in the rupee. And on top of that, we have seen, pretty positive sentiments coming out of the US, which is the largest client area for Indian IT. I think a combination of all that and probably the headwinds that we saw of a very strong rupee in the last 2 years coming off, I think all of that is starting to, show up in the numbers. We are also seeing very strong, I would think, body language from most of the IT majors. And this time the IT strength is actually running across not only the larger IT companies, but going down into the mid and the smaller companies as well. So I think that's something which will sustain. Anything which leads to, strength in revenues because of a lower or a weaker currency is something which we think will continue to do well. And surprisingly, Indian metal manufacturers or companies in the material sector actually also do benefit from a lower rupee, because most of these global metals are indexed to the LME prices, which are dollar denominated, and as a result their revenues actually do start to go up. So as long as you have your debt under control and your costs under control locally, you'll start to actually make a lot better margins this year as well. So I think that's a hidden part of the Indian economy which also benefits out of a lower rupee. So all is not gloom and doom, I would think.
Okay. Well, for now, one of the stocks or the stock of the moment is Muthoot Finance. It's up almost 5% on the back of very good numbers, as we told you. The loan growth was the highest in the last 11 quarters. So that stock is just soaring away. Tushar, any thoughts on how to approach this entire pocket, the NBFC lot? Some of them have lost a bit of sheen, the larger ones like Bajaj Finance. There's a lot of talk of competition, disruption, etc. But do you think there's still money to be made in this pocket?
Yeah, I think the way you bring this subject up, the lot of NBFCs, I think there are a lot of them, and I would think that there is a pretty strong segmentation that one needs to do. So if you talk about gold finance companies, I think they are addressing a very small and a very specific part of the market. When you talk about Bajaj, it's talking about a very large portion of the personal finance part. Then we have all these other NBFCs which also are pretty specific to in terms of what kind of lending that they do. There is microfinance, there is general housing, there is affordable housing, there is, I mean, if you bunch all of that into NBFCs, it's very difficult to take a call on NBFCs as a lot. But I think if one tries to be a little more granular, you will find that there is plenty of opportunities even now. I think with the public sector banking sector in such a difficult space, I think lack of credit is really the bigger concern. And as a result, I think these NBFCs are really filling the gap. So if you have consumption growth very strong in this country, I think the NBFCs are the ones which are funding that growth in a way. And I think that's something to always be very positive about. However, of course, these things do move in cycles. At the moment, we are seeing a pretty significant growth in assets across all NBFCs, and that's driving even stock prices. It will plateau at some point of time, but I believe that's still some time away.
Okay. Well, at the moment, the market is putting on a little bit of weight, a little bit, not a whole lot. What about metals? Do you think that the best is over for them, Tushar?
Well, I think metals have gone through a little bit of a cycle. So in 2017, we saw the first flush of prices going up after many years, and then they benefited out of the margins that they saw. Beginning of the year, we saw a tempering of those prices, and they were not really making as much money as they were making last year. But as the year goes by, I think especially domestic global metal companies should definitely benefit. As I said, I think the weaker dollar is something which definitely benefits them. And over a period of time, the kind of demand that we are seeing is also continuing to remain pretty strong. So don't forget, there is a slight capex cycle which is picking up initially, of course, from the public sector. But I think as we follow through, there is a lot of private capex which is also coming to the fore. So I think all of that should support this sector going forward.
All right.